This is the FFR Trading Market Minute, and again, this is a daily candlestick chart of the SPY. Last week, I left my analysis on the chart here. That was the line I drew back to the 20-period moving average. So as we were coming down, I expected we would get a rally, especially once the RSI crossed back above its moving average here. Expected we would get a rally this week and test that 20-period moving average, which we got. Today is Thursday. Here's the current candle. We opened higher there, and market has now filled the gap back to the prior day's close, and you can see we're still selling off here. The next downside target here is going to be this little gap to fill that was left back from a couple of days ago here. All right, so we should find some support there, and we'll see then if we consolidate a bit or maybe retest the 20 period. If we do get below that, well, the tendency is once they fill a gap, about 80% of the time you get a bounce off that level. So we'll see. If they take that out, now the RSI is still above its moving average here. As long as it stays above that moving average, we actually kind of favor a market can sell off down to this gap fill here. And I think we would probably rally and retest that 20-period moving average here, as long as that RSI stays above its moving average here. If it does cross, whatever day it closes and crosses below that moving average, whatever that low is that day, if that gets taken out, then we should start retesting the support down here and maybe this next level support I've got here. So in other words, this would be the pattern, right? This would be that next leg down, potentially down here. Right? That may have started here. We'll see what happens, what kind of reaction we get when this gap fills here. Bigger picture, we're not out of the woods yet. If I go to the monthly chart here, you can see we just started the month of August here. That's so far the red candle. We made a higher high, but again, we've got divergence now on the monthly chart. Obviously a bigger picture, but we had a high in the RSI here. As price made a high, price continued to make a higher high even this month, and we made a lower high in the RSI here. So that may take a while to play out. Obviously that's off a monthly chart, but that is something that we need to pay attention to. So overall, we could see much more downside, if the market is not able to, start taking out, maybe filling this gap and retesting the all-time highs here in SPY. And finally, this is that daily chart of the VIX. And again, we came up into that trendline resistance. That's where the starting to bottom and rally back to the 20-period moving average. The VIX here spiked into that trendline resistance and it's fallen off here now. So we'll see. What's happened in the past is as it spiked up into that trendline resistance, it's fallen back down, back into those lows around 12 in the VIX, and so 11 and 12. So we'll see if that's the case. Yesterday, the Fed did not change the interest rates, but is leaning towards, and the market's pricing in 100% chance of a rate cut in September. Now, typically when the Fed starts cutting rates, right, the market actually sells off. So we're going to have to see how that plays out. So far, we've gotten some good earnings from AMD. We'll see what NVIDIA's earnings, if they can knock it out the park, then that will help the bull case anyway. So we'll see how this resolves, but keep watching obviously the S&P, the VIX, and see how these things play out. Not much on the economic data front next week. Monday, we'll have ISM Services PMI and Thursday's initial jobless claims. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.